All right, well, good morning, everybody. Thank you for joining us. This is another edition of our weekly real estate backstory. We do this every Monday morning at 8:30 and 9. A little bit early this week because we have a lot of classes we're teaching, that kind of thing. So you
Absolutely.
kind of got us a little bit early today. But we hope that you're set up for a great week. My name is Alan Richardson. I'm the managing broker here at Maximum Realty and Realtor Partners.
My name is Richardson, the compliance broker for Maximum One Realty and Realtor Partners.
And we kind of want to jump into talking about, like one thing we've seen, gosh, especially for the last 6 months, is we're seeing a lot of deals that are dying. And personally, like I think we all hate to see deals die, but sometimes we see deals die that didn't have to die, right? And so, like the big question is, how do you keep deals from falling apart? We were talking to a couple of agents this past weekend about it, that kind of stuff. And so we have some tips and advice for you. The first thing is be proactive. Don't wait for it to be a problem. A lot of times we do know bad news in advance.
Absolutely.
And it's very easy to just kind of shove our head in the sand and then be like, oh, well, but like in a lot of cases, we'll know if there's going to be inspection issues or there's a potential for inspection issues, like that the roof is really dated, but the seller doesn't want to repair it, or the HVAC or those kind of things.
Right.
Are we worried about appraisal issues, those kind of things? Buyer financing is another.
That's a biggie right now,
challenge.
just because the points, the rates aren't moving. It's like a moving target. So right now, if the buyer did not lock down their rates, then what they were qualified a week ago may not be the case today.
Or even just buyer remorse. We've seen a lot of cases of buyer remorse and then double buyer's remorse when they back out of deals and then find out, guess what? The real estate market isn't tanking. Like, if you watch the news, you'd think things were actually terrible. So one thing that we do advise is for you to look out for any kind of weird, odd requests from the other party. That may kind of be a sign that trouble is brewing, trouble's on the horizon, kind of thing.
Absolutely. And if you have odd deals, 9 out of 10, make sure the financing is in place, because we do have some scammer out there right now are trying to scan the property.
Well, but our encouragement here is to, first of all, be very, very proactive. Like we need to be on problems like a fat kid on a cupcake. Okay, we need to be aggressive about it.
Cupcake.
I do too, obviously, right? But the bottom line is that like if you're waiting for the problem to fix itself, it's not going to.
Absolutely.
So you have to jump out there in front of it. You have to stay flexible, because like especially for the agents, our buyers and sellers are always not going to feel flexible. And so sometimes we will kind of retain our client's posture, and we need to stay flexible to keep deals kind of moving ahead and that kind of stuff. One of the proactive things that we always try and do, we try and promote our lenders, our closing attorneys, those kind of things. Like, and I don't mean that from a greedy point of view, but like, if you're my lender, I know that you're going to do a good job. You're going to close the loans that you say you're going to close. You're going to follow through on your commitments. Sometimes when it's lenders that we don't know, when it's some of these national companies and you can't talk to the same person twice, especially in the current mortgage situation that we're in, I need relationships really do matter.
Absolutely.
So now when things do go south, so very first thing is that you need to be very honest.
And also manage your expectation, because what has been happening, prior to the interest rate hike, is that seller can't do no wrong, and buyer just have to take it as is. Now that's not the case. So understand, when you have a representing seller, you need to let them know what the expectations are.
We're moving into a balanced market, and so making sure everyone's aware of that. And the days of like, it's going to be this way or nothing else. All I want is cash and this and this and this. That's not the market that we're in. And so you need to set those expectations with your clients also. One other thing is we've got to keep people talking. Oh my goodness.
Prospect, y'all. Not only that, you need to reach out to your sphere of influence and talk to your sphere, as well as your client, the industry, your broker.
Well, but when things are going south, it's you've got to keep the two parties talking to each other. Like sometimes, an issue comes up on a transaction and it turns into just text messages and emails. I've got this text message thread from so and so, and they said this, and their email said this. You can misconstrue so many things in email and text. Yes, we need things in writing. I'm not saying we don't, but like we need to be communicating, and that's going to happen if you keep everybody talking.
And honestly, phone conversation is the best way because you can interpret misunderstanding immediately. Yeah. Whereas text, if you text me when I was doing something else or has something happen to me, I may construe that as something else. So always give them the benefit of explaining and let them know what's going on.
Now have your resources ready to go. Have your partners that can jump in to help, whether it's your attorney or even just any other kind of business partners that you need to help keep a deal alive. Be ready. And then be creative. It's being a more balanced market. If you just accept the deal is dead, then it's dead.
We actually have seen a couple of reinstatement.
And honestly, we've seen a lot of things that actually end up coming back out. But the thing is that don't just be so. We sometimes we see like, oh well, it's dead. Just we're done. Like there's a chance to put going to pull this thing through.
And I've seen backup offer become primary. So these are just creative way of doing things. So don't give up.
And but the other thing is, don't be a nasty B or A about it kind of thing. Like be pleasant. Like no one likes when a deal dies.
Right.
But to be really unpleasant and nasty, that shuts down communication. It stops things from moving forward. That's not the way to be. I don't like it when things go south either. No one does, but that doesn't give you the right to like yell at people and go off and that kind of stuff. So, we've got to stay creative, credits in lieu of repairs, home warranty, closing costs to buy down points. There's just a lot of options that we have there, but please don't give up on your deals too early.
Yes, absolutely.
All right. So I want to kind of share with you guys, if I can find the share button, that'll work out.
About Airbnb.
Well, and I know that we're in real estate, right? And so this isn't a direct correlation over here necessarily, but one thing that, and if you've been keeping up with the news, there's this thing about, is the Airbnbust a real thing? And the short answer is no. There is a lot of folks in that industry that have seen just like due to everything else, a tightening up in there. And so what we're seeing is that the folks who had like really crazy high fees and when there was a lot of hosts that were doing things like you need to make the bed and take out the garbage and you should mow the grass and make sure you scrub the tub and do all this other kind of stuff and then charging high service fees and all this other kind of stuff. Those folks took it in the chin. But guess what? Overall, demand is actually up for B&B bookings, kind of thing. And so they're not seeing a drop in sales, that kind of stuff. What they are seeing is for those folks that were trying to floss everybody else, the economy is impacting them as well. So don't think the Airbnb is going by the way of the dodo kind of thing.
No, it's not. It's the luxury market of Airbnb that is slowing down.
Yeah. That being said, if there is a place to look, I would be looking at some of these folks that might be looking to sell. Might be a right time.
Absolutely.
Kind of thing. All right, the key inflation gauge for the Fed rose again, 0.5 point. And so that was in line, but the core personal consumption went up. And so we know that the big thing that the Fed is fighting is inflation. And so when inflation goes up, guess what the Fed did? Well, the Fed raised the federal funds rate another 75 bips or BPS or 75 percentage points, however you want to put it, kind of thing. And so, our key standard rate is really back to where it was in 2008. And not that I'm trying to paint any kind of correlation with the housing crash of 2008. That's not where we're at, but that's where our rates are right now. And so, one thing that Powell did say that was kind of like a silver lining for the markets and that kind of stuff is that the rate hikes may slow, but the inflation fight is over. And I think that we're going to keep fighting that inflation. It's a much longer term thing than just a couple of months of higher interest rates.
Absolutely.
But that being said, even when you have something as significant as another 3/4 point jump, guess what happened to rates? It dropped. I know. Makes no
That doesn't make
right?
sense.
Well,
The reason why it dropped, I think a lot of mortgage lenders are feeling it. They're feeling it really, really hard. So,
and
what they're doing, they're actually discounting their services.
well, but the federal
to a
funds
certain
rate
extent.
does not directly affect mortgage rates. Mortgage rates are
10-year
primarily
treasury.
affected by the 10-year treasury. And
Correct.
so when the Fed, when Powell came in and said, look, we're going to be doing smaller increases, well, the market reacted very positively to that. And so people took money out of the 10-year treasuries and out of bonds and those kind of things. And when they did that, that meant the rates went down and mortgages are a treasury. And so those kind of things dropped a little bit. So even though, and that's why it goes to show it's more about news and the markets than it is
Correct.
about the federal funds rate on there.
And the market is what dictating what the investor thinks. So therefore, they're making their best educated guess and doing where they want to invest.
Now, we know that right now the market is in flux. We already know that, but we also got to make sure that we're looking out for our lenders a little bit. Right now, according to the Mortgage Bankers Association, mortgage purchase applications are down 40%. And refis are down 86%. Okay. And so more and more the lending business companies are doing layoffs, some are closing. It seems like every week something else is happening. And we only bring this up because, over the past several years, we've been in an accelerating market. It's been a really good time. And so our lenders have been very, very supportive of us in the industry. And so, need an open house? Yeah, no problem. Want me to come do this? No big deal. Hey, I need a gift card for this? Boom, done. Well, guess what? Now they're feeling the strain. They're feeling the pressure. So if you start getting some pushback from lenders on, sponsoring different things, doing things like that, like also understand that things are really, really tight on their end. The other thing is now's a really good time to partner with the folks that are going to take care of you that you take care of.
Absolutely.
So, CoreLogic, who is like the back end of so many of our MLS systems. So they're really, really heavy into the up to the minute data kind of thing. And so they released the home price insights for November. And so they're looking at month over month property values dropping by 0.5 point. However, they're looking at for the current month being 11.4% up over last year. And their forecast for the next 12 months is a property value increase of right at 4%. And so, they're looking at next year that's kind of being much more flat. And we think that that's pretty close. We've been saying for a while that we're looking at property values somewhere in that 3 to 5% range, which is historically really, really normal. Like 4.4% property value appreciation is our average for the last 50 years. So we're heading into, like, as weird as it sounds, normal times, right? But this here is kind of like the home purchase index and the Case-Shiller index kind of thing, and you can see that they're actually looking at values kind of moving up. Because everyone does feel like once inflation comes down, the interest rates are going to start softening again. Now, for here in Georgia, we came in one of the top 10 states on home property value. We come in at 17% annualized basis, which is really, really strong.
Still great.
And so like here in Georgia, we got a lot of really great things going for us. And our market is not the same as in several places. Like one thing you're going to see is that like overall, some cities had massive, huge gains. I mean, Miami still was 25% property value increase last month.
Which is crazy.
Oh, absolutely astronomical kind of thing. Miami is going just freaking nuts. 13% in Houston, another 14% in Phoenix, that kind of stuff. So a lot of these places are seeing really, really massive property value increases. Not that I'm against those, but my like a worry for me is that we would be on that list, because anything that goes up really fast is probably going to be prone to have the greatest opportunities to come down really fast, which is what we're seeing. And like these are the places that are going to catch the headlines, right? The top markets at the risk for a price decline: Fort Walton, Bremerton, Washington, Bellington, Washington, Oregon, Washington. all these places, guess what's not on the list? Atlanta, Georgia, that kind of thing. You know, we're here in the Sun Belt. We have a lot of really positive things going. Yes, we saw really strong property value increases, but they were moderate, if that makes any sense, compared to a lot of the other places. Ours have been really, really strong. So we're not looking but like people look at that and you know, they take that to mean the national,
Well, they're
or the
looking
local.
at it.
I think that's going to be here in Atlanta too, kind of thing.
They're applying what's going on in specific market as their own market when that is not reality.
And so if you look at the numbers right now our median sale, and so these are national numbers. Again, this is not just Georgia, but I want to show you what our national numbers are right now. And so you can see that median sales price is still up 4% year over year. That's on an annualized basis. Just last month, it was about 4% year over year.
Right.
And our median asking price, however, is 7%. This year is our first challenge because we're seeing where the sales price is coming in a little bit over 3.5, 4% up, but our asking price is almost 7% up. And so that's why we're seeing so many price reductions.
Almost 3% gap right there.
2 to 3%.
Yeah.
And it's, you know, which is, you know, when you're talking about
expectation
$400,000 house, it's,
right.
You know, it's $12,000. So it's significant on there. But we're seeing where that's a big challenge for is getting our sellers to realize like what's really happening in the market.
Absolutely.
Pending sales are down 33%. We've known this, but some of this is just normal historical trends, right? We trend down now anyway, kind of thing. But we are under the last 2 years. But the last 2 years weren't normal.
But if you look at the graph kind of follows the same up and down, except with last year because the interest rate was really good at year end. And you can see where the uptick of the blue line was because of the interest rate.
Yep. Now, here's one thing that, and part of the reason why we're continuing to see property values holding as steady as they are, new listings of homes are down 18%.
This is
under.
huge.
And so, yes, we are seeing a slight uptick in overall inventory, but we're not seeing we're not getting new listings.
Right.
I mean, like the listings that are coming out that are selling quickly, still strong. But if they come out and your listings are overpriced, guess what they're doing?
They're staying in the market.
Yeah, I mean, you may as well plant them in the ground because they're going to be there for a while, kind of thing. So active listings overall are up 7%. So we're up over last year, but we're not over the last forever years, kind of thing. And so you know that's a big deal because even though you say okay, new inventory, I mean total inventory is up 7%. Well, we're down about 50% from where we were several years ago, and we have a population that is drastically higher than it was several years ago. So, you know, supply versus demand is still really, really strong. Nationally, 3.3 months of supply on a national level. We're closer to 2.6, 2.7% here in Georgia. And so, yes, inventory is slightly on the uptick, but guess what? We need 6 months to have a stable market. So we're just moving towards balance here. Still over a third of our contracts are under of our purchase contracts are under contract within 2 weeks. That's your benchmark. If you're not under contract in 2 weeks, gee, I wonder what it is, man. What do you think?
Your price too high.
Price, bottom line. Yeah. What about, but we have in-floor heating. It's price. I don't care. Like it's price.
Because the buyer perceived your property is not worth it.
So right now, our median days on market is 35 days, which is still historically really, really low. However, we're seeing that 8% of our listings have price drops. And, you know, here in Georgia, we're seeing even a higher percentage than that. We've been up in the 20% here in the Georgia area. So the listings that are sitting out there, you know, you have one choice to sell it to market and list those properties that are sitting on the market. Drop the price. Sometimes the sellers need that, you know, you have to be proven right.
Well, they need that confirmation because they still living off memories and some of the their sphere influence what they say.
But make sure that you're being honest with them. You don't want to be the one who's like, well, I thought I was going to sell at this price. No, you need to be honest about what's happening with pricing right now. So right now, our average home sold for 98.7. We're actually under 2020 now. We've been under 2021, but now we're going under 20. We're at 98%. I mean, 97 is roughly our kind of average for the last 10 years kind of thing.
Right.
but we're still, I mean, drastically under. We wanted to kind of change gears, and so there was a widow that has sued an agent about pocket listings, and so we wanted to just kind of offer a bit of caution for agents out there, because and I'm not going to say that pocket listings aren't right in some instances. There's times when you already know this person, and sometimes the buyers and the sellers know each other, that kind of stuff, and so that's very different. However, what we're seeing happen is this is an instance where the listing agent knew the investor, kind of thing,
Right.
said the home was in poor condition, and really her best choice was just to sell to that investor they knew, and not to go fair market, and feels that she got cheated out of $160,000.
That's a lot, y'all.
And so, be very leery of, we're very leery of pocket listings. Again, I'm not trying to say that there's not a time and a place for them, but we have to make sure that we're kind of looking out. Like we're seeing where it's going back to some time with some lenders, for example. Like you may not be able to get a mortgage on a home that hasn't been seasoned on the market. You need to make sure that market, or that property, is being subjected to the marketplace, to let the marketplace help to decide, not just a single agent's opinion of value on there. So what we're trying to offer is caution, I guess,
right,
the right way to.
Well, we don't want to be construed as someone that take advantage of a situation, especially folks that are going through sudden personal loss, such
financial hardships.
Financial hardship, a widow, someone that recently may be looking at divorce. Those are hardship, y'all. So please handle them with kindness and do what's right by them, because in this instant, $160,000 is a lot of money, y'all. Just to say, oh, by the way, I can't sell your house that quickly without selling to this one investor.
So options, always give your clients options.
And if you feel like you told your client all this and they're not listening, put an email. Okay, so per our discussion, this will cover you as far as whether or not you were thorough in the whole process.
There's a new study out from Redfin where they shared that a record number of home buyers are migrating from one metro to another. And now maybe not all, a vast majority of these home buyers are migrating from high cost of living areas to lower cost of living areas. And so, when I talked earlier about how Georgia's doing really well, guess what Georgia is? I mean, if you compare us to New York, which is where the number one people comes in, LA, California, Jersey, Oregon, all these kind of places where the cost of living is just astronomical. You sell a medium priced home in New York and you're living pretty high on the hog down here in Georgia. So, right now, 24% of home buyers are migrating from one metro to another. And so we bring this up to kind of point out the fact that, one, the market really is doing good. And two, should you be reaching out and engaging buyers from outside of your normal sphere right now? Absolutely. Like we need to be doing everything we can, like moving in, want to know about this area, talking about, like do things on social media, talking about, different things in the area, places to look. I'm sorry.
I know you just need to do a portfolio of the area, the other metro area that you want to target, and make a land look spectacular. Yeah.
In other news, I'm going to shoot. So Opendoor laid off about 20% of its 18% of its workforce. So Opendoor lays off 550 employees. I'm very distraught.
Be nice.
All right. Zillow at the same time also laid off another 300 people, kind of thing. And so Zillow cut about 5% of its workforce. And now some of this is definitely economic driven and also driven from the fact that they stopped iBuying. However, one initiative that we're seeing on Zillow right now is that Zillow has decided that they want to become, quote unquote, the super app. And so the super app is one of those things that where what we're seeing is that when you offer your clients your app, so like here we have the Million Mapped app that's tied to our KV Core, or whether you're using your Home Snap or an app that your particular broker may offer, using those apps is a really great thing. Zillow sees this as such a major initiative that they're calling themselves the super app. So do you want your clients to use the super app from Zillow, or you want them using your app?
Just remember, Zillow capture your client's data and turn around, sell it to you 9 out of 10. So
don't give them that chance.
Don't give them a chance. Use your own app and have your client search. Even if you have to have them go Georgia MLS and search on your portal if you don't have anything.
Now, one thing you may see this coming out here is that rents are slowing. And are they slowing? Yes, they are starting to slow.
Thank goodness.
But please don't think this is kind of a reprieve. Like you can look, like 2018 was up 3.5%. 2019 was 2.5%. We were almost 18% last year. So now we're running at about 6% property value. That's on top of the 18% last year. That's on top of 3.5, 2.5, that kind of stuff. Rents did take a little reprieve right during COVID because there were so many mortgage moratoriums and people couldn't raise rents and that kind of stuff. However, there was a huge bump last year, and now rents are, and so when you see folks saying, well, rents are going down, I'm not disputing that, because guess what? Other than last year, it's seasonal. Like if you look at what happened in 2018, 2019, rents, kind of like in the residential real estate market, we see, it's a supply versus demand issue. And so during the spring, summer, and then waning in the fall, demand increases and then lets off. When there's less demand, then you see prices drop. So like if you look at 2018, 2019, 2020, property values drop off this time of year anyway.
Right.
So this is really, really normal. Don't think that there's like, oh no, rents aren't going back up. Rents are going back up.
Absolutely.
So because it really does come down, like this slide says a lot about what's really happening here. Okay. And so you can see that, at the start of the pandemic, national vacancy rates was about 7%. We've been running in that 6 to 7% range for a long time. And then it really started dropping off. And now we're still sitting at 5%. We're still at some of the lowest vacancy rates. And so when vacancy is low, prices are going to continue to go up.
Higher demand for rental right now.
All right. So, we got a ton of CE again this week. And so today I'm going to be teaching the Ultimate Buyer System. That's also virtual. We're doing our relaunch, which is our 25-hour post-license class. Tomorrow, please come in. All of our offices, all the partners' offices are having our sales meeting tomorrow at 10 a.m. Come into the sales meeting, get some great information, then go vote, because tomorrow's the day to go vote. Last chance to do it. Wednesday, I'll be teaching the Ultimate Listing System. That's going to be virtual. Thursday, we've got estates, divorces, investors, and companies who can sign contracts, the whole 9 yards. That's going to be in person at our Fayetteville office. And then Friday, my blushing bride here is going to be doing Show Me the Money and Get Me to Closing. That's going to be, we're going to have the closing attorney, the lenders here, and then Ming's going to be kind of talking about contract to close and all that.
Right. So that wraps up our weekend, and we hope you take advantage of some of these classes. Love to see you tomorrow at our sales meeting.
Hope you guys are having a great week. Hi, y'all.
Thank you. Have a good day.
Deuces.